The market often appears chaotic. It seems random, driven by millions of independent decisions occurring simultaneously. This apparent chaos is merely the surface layer. Below this superficial disorder, the market is typically governed by highly coordinated and deliberate action. Richard Wyckoff observed this underlying structure decades ago. He created a powerful conceptual tool to simplify this complex reality. This tool is known as the Composite Man, or the Composite Operator. This figure is not a single person. It is a necessary fiction, a metaphor. Before continuing, please subscribe and leave a quick comment, even one word. This small action helps the algorithm show this content to more people. The Composite Man represents the collective power of large institutional money. This includes major banks, professional traders, and highly financed trading desks. These groups act in near unison when executing their campaigns. Their actions are deliberate. They are planned over weeks and sometimes months. The professional trader must understand this coordination. Without this conceptual framework, the market remains confusing and impossible to navigate successfully. The Wyckoff Method teaches that all price movements must be viewed as the result of a single, unified mind. This single mind has a straightforward objective. The composite operator aims to profit from the predictable emotional responses of the public. Their campaign starts with accumulation. They buy shares at low prices. They absorb the supply sold off by uninformed traders, often during periods of panic or despair. Once the accumulation is complete, the Composite Man then works to distribute those shares at much higher prices. They sell them directly back to the public, usually during periods of intense excitement or euphoria. The market structure itself is designed to facilitate this transfer of wealth. It moves continuously between phases of accumulation and distribution. The professional operator relies heavily on deception. They manufacture price swings designed to mislead the majority of participants. They create specific emotional traps for the retail crowd. Understanding the Composite Man is the first step toward trading professionally. It allows the trader to stop reacting emotionally to price swings. Instead, the trader begins reading the intent behind the market structure. The goal is always to align your campaign with the professional operator, never against them. The first secret of the Composite Man centers on the manufacturing of scarcity. This process is fundamentally about supply control. The professional operator cannot initiate a major upward campaign until the floating supply of the stock is firmly held in strong hands. If the market is flooded with sellers, any attempt to raise the price will be met with overwhelming resistance. Therefore, the primary goal during the accumulation phase is absorption. Absorption is the systematic process where the Composite Man buys up all available selling volume within a specific price range. This buying occurs slowly and deliberately over an extended period. The operator must avoid purchasing too quickly. Rapid buying would reveal the campaign too early and drive the price up prematurely. Instead, the activity is hidden within a consolidation range, often characterized by high volume and wide price swings that appear chaotic to the untrained eye. This chaos serves a specific purpose: to shake out the weak holders. Wyckoff described these weak holders as the public who trade based on emotion or rumor. They are easily discouraged by volatility. When price drops sharply, the weak holder panics and sells their shares. The professional operator is there to absorb those shares immediately. This transfer of ownership from weak hands to strong hands is essential. The Composite Man is not just buying. The operator is testing the market repeatedly for residual supply. If the price is pushed to the upper boundary of the accumulation range and significant selling volume returns, the operator knows absorption is incomplete. The supply remains. The price must then be allowed to retreat, allowing more time for sellers to liquidate their positions at lower prices. This rigorous testing continues until the professional operator confirms the supply has dried up. Scarcity is achieved when nearly all available shares have been locked away by the Composite Man. Once the market is cleared, the effort required to push the price higher dramatically decreases. A small amount of buying pressure applied to a market with no sellers results in a swift, sharp increase in price. This is the markup phase. The entire structure of accumulation is therefore a meticulously planned operation designed solely to achieve this condition: complete control over the floating supply. The successful trader understands that the duration and complexity of the accumulation structure directly reflect the amount of supply that needed to be absorbed. Longer consolidation means more absorption was necessary. This implies a greater potential for the subsequent move. The next step is recognizing the initial signs that the Composite Man has begun the accumulation process. This starting point is identified through the stopping action. The stopping action halts the prior downward trend. It signals that professional interests are aggressively entering the market. This entry absorbs the massive supply being thrown by distressed sellers. The most dramatic element of the stopping action is the selling climax. This event is characterized by extreme selling pressure. Panic floods the market. The price spread is typically very wide. Volume spikes dramatically higher than any previous period. This spike confirms the transfer of ownership from the weak public to the strong professional hands. The selling climax often appears as the final capitulation move. Weak hands are forced out at the absolute low. This is the moment when the Composite Man secures the largest block of shares. They buy directly into the market's fear. After this intense absorption, the market experiences an immediate and sharp price reversal. This move is known as the automatic reaction. The automatic reaction occurs because the massive demand from the professional buying suddenly overwhelms the remaining available supply. Since supply has been temporarily exhausted, the price must spring upward. The high point of this automatic reaction sets the initial upper boundary of the future trading range. The low of the selling climax establishes the lower boundary. These 2 points define the arena for the subsequent accumulation process. The professional operator must then confirm that the supply has indeed been successfully absorbed. This confirmation happens during the secondary test. The secondary test is a movement back toward the area of the selling climax low. This pullback checks for any remaining supply that was missed during the initial panic. It tests the strength of the new demand base. If the test is successful, the price will hold above the selling climax low. It demonstrates that the Composite Man is prepared to defend the newly established demand zone. Crucially, the volume during the secondary test must be significantly lower than the volume seen during the selling climax itself. High volume on the secondary test suggests that significant supply still exists. This would indicate that the Composite Man needs more time or potentially lower prices to complete the absorption campaign. When the secondary test holds firmly on diminished volume, Phase A is considered complete. The basic structure of accumulation is now fully outlined. The Composite Man has successfully stopped the decline, absorbed the panic supply, and defined the boundaries of the accumulation range. This entire sequence confirms the transition from a markdown phase into the preparatory accumulation phase. The professional campaign has formally begun. The start of the professional campaign activates a foundational principle of the Wyckoff methodology. This is the immutable law of cause and effect. Wyckoff taught that preparation must always precede performance. The entire accumulation structure represents the cause. The resulting markup phase is the effect. The professional trader understands that the size and duration of the cause directly determine the potential magnitude of the effect. This structure is built meticulously during Phase B. Phase B is characterized by price moving sideways in a clear trading range. It is often the longest and most frustrating phase for inexperienced traders. The Composite Man works diligently during this period. The objective is twofold. First, the professional must absorb all remaining floating supply. Second, the operator must confirm the boundaries of the established range. Volume tends to decrease significantly as the campaign progresses through Phase B. Lower volume signals that the overall supply is being controlled. Multiple tests of the range boundaries occur during this time. These are known as secondary tests. A secondary test confirms the level of supply present at both the top and the bottom of the range. If a boundary test shows low volume on the selling side, it confirms the Composite Man's control. If the test shows high volume, it signals that more absorption is required. The professional operator must ensure control is absolute before launching the markup. This leads directly into Phase C. Phase C is designed specifically to deceive and dislodge the final weak holders. The Composite Man creates a sudden, decisive downward move. This move momentarily breaks the established accumulation range. This deliberate break is known as a spring or a shakeout. The shakeout drives the price below previous support levels. This action triggers stop-loss orders from retail traders who entered prematurely. It creates a final wave of panic selling. The professional absorbs this last desperate supply at the lowest possible price. The spring is a critical event because it achieves two goals simultaneously. It confirms that the remaining supply is minimal. It also proves the strength of the Composite Man's commitment to the impending markup. If the market fails to quickly recover after the spring, it suggests the Composite Man is not yet ready. A successful spring will be followed immediately by swift buying. This confirms the supply has vanished. The market is now poised for a significant move into Phase D. The successful completion of the spring is the hallmark of Phase C in the accumulation structure. This event represents the Composite Man's final aggressive action. It is designed specifically to trap retail traders into selling prematurely. The spring drives prices below the established range lows. It violates the support level set by the selling climax and the secondary test. This penetration creates maximum pessimism among the weaker hands. They panic and sell their shares at the absolute low point. The technical analyst must observe the volume during this low penetration. Ideally, the penetration occurs on high volume. This indicates a massive transfer of shares. The shares move from weak public ownership to strong professional hands. The subsequent rally must then show a sharp reduction in volume on any retest of the low area. If the Composite Man has successfully absorbed all available supply, the price will recover quickly. This rapid return back into the trading range is the necessary confirmation. Without this immediate recovery, the move is merely a failed test. It is not a true spring. Once the spring confirms the supply absorption, the market transitions into Phase D. The next critical event is identifying the last point of support. The last point of support is the final shallow pullback that occurs after the initial rally out of the spring low. It is a crucial test of the new demand structure. It must demonstrate that selling pressure has completely dried up. Prices pull back toward the top of the accumulation range. However, they must hold well above the spring low. This adherence to higher support confirms the shift in market control. The volume during the formation of the last point of support should be conspicuously low. This low volume confirms that virtually no supply remains to be hit. It shows the Composite Man has successfully controlled the available float. This specific point provides the lowest risk entry for the professional trader. It is the final opportunity before the major sign of strength. This sign of strength is the move that launches the market into the final markup phase. The professional trader recognizes the last point of support as the definitive proof of readiness. It is the market's final declaration that the cause built during accumulation is complete. The effect, the substantial price move, is now imminent. This decisive action, however, does not mean the Composite Man ceases his deceptive operations. Deception is the third secret of the professional operator. It is a continuous campaign designed to mislead the public, ensuring the smart money can buy low and sell high without triggering widespread competition. The professional trader does not rely solely on the visual structure of phases. They rely on the analysis of market physics. This is where Wyckoff's third law becomes essential: the law of effort versus result. Effort is measured by volume. Result is measured by the corresponding price change. Under normal market conditions, a large effort, high trading volume, should produce a large result, a significant price movement. When the effort exerted does not match the expected result, a serious anomaly exists. This is the unmistakable sign of the composite man hiding his true activity. Consider a period of accumulation. As price pushes upward, extremely high volume appears, but the price only manages a small advance. The effort is massive, yet the result is negligible. This indicates that professional supply is entering the market, or that the composite man is absorbing a large amount of remaining stock. This lack of progress, despite heavy activity, serves two purposes. First, it frustrates speculative buyers who expect immediate, rapid gains. They often sell out of impatience. Second, it allows the composite man to quietly absorb shares without letting the price escape the trading range too quickly. The market appears heavy and slow. Conversely, imagine a clear upward move occurring on unusually light volume. The effort is low, but the result, the price advance, is substantial. This signals an absence of significant selling pressure. The market is moving with ease. The composite man has successfully controlled the supply, and the path of least resistance is now clearly upward. The law of effort versus result is critical for spotting premature distribution, which is the selling campaign run by the composite man. During distribution, the professional operator must convince the public that the market is poised for a major new surge higher. They need strong public demand to take the shares off their hands. The most dangerous deceptive action occurs near the top of the range. The market may register a dramatic price spike, moving well above previous highs. This dramatic move draws headlines and retail excitement. This is the effort. But closer inspection reveals that the volume supporting this spike is thin or inconsistent. The result of the price move, while visually impressive, is fragile. The composite man is using minimal effort to achieve maximum visual impact, ensuring the public buys the remaining inventory just before the substantial decline begins. Understanding this relationship between volume and price is the key to avoiding the final trap. The structure of distribution is the mirror image of accumulation. The goal is completely reversed. The composite man is now offloading inventory. He is not acquiring it. This process requires the professional operator to create the illusion of strength. The market must appear ready for a massive upward continuation. This is essential for attracting public participation. The public must buy the remaining shares. The culmination of this deception occurs in Phase C of the distribution structure. This phase features the upthrust after distribution. The upthrust after distribution is the final, definitive trap. It is a decisive break above the established resistance of the trading range. It appears to be a powerful breakout confirming a new trend. Retail traders and trend followers see this new high. They interpret it as a definitive sign of strength. They commit substantial capital based on this visual confirmation. This is precisely the liquidity the composite man requires. The professional operator uses this surge in demand to finalize the selling campaign. They distribute the last large blocks of stock at the highest possible prices. When analyzing the upthrust after distribution, the effort versus result rule is paramount. The initial move above resistance may exhibit high volume. This volume confirms the professional selling. However, the continuation is absent. The price cannot hold the new high ground. The move stalls quickly. It fails to attract follow-through buying from other institutions. The price then swiftly reverses back into the trading range. This failure is the defining signal. The composite man deliberately creates a temporary vacuum of supply. This allows the price to spike higher. Once the public rushes in to fill the perceived gap, the supply returns immediately. This selling pressure overwhelms the weak demand. This action confirms that the composite man has successfully transferred the inventory. The stock is now held by the weakest hands in the market. The stage is set for the inevitable markdown. The failure of the upthrust after distribution marks the transition into phase D. This phase is characterized by clear signs of weakness. Support levels that held throughout the distribution process now begin to fail definitively. The professional operator has completed the cause built during the distribution structure. The effect, which is the substantial decline, must now follow. Recognizing the upthrust after distribution is crucial for avoiding maximum loss. It provides the final warning before the market begins its downward trend in earnest. The professional campaign requires distinct confirmation before entry. The trader must wait for the market to prove that the absorption process is fully complete. This proof arrives in the form of a decisive move out of the trading range. Wyckoff termed this breakthrough the sign of strength. The sign of strength is a substantial price advance. It occurs on high or expanding volume. It confirms that the Composite Man has successfully absorbed the available floating supply within the accumulation structure. This move breaks the established resistance line of the entire range. It signals that the price is now free to begin the markup phase. The sign of strength validates the earlier stopping action. It confirms the success of the spring or the shakeout that preceded it. It shows genuine commitment from the professional interests. However, chasing the initial breakthrough is often high risk. The ideal, low-risk entry point occurs during the subsequent reaction. This reaction is known as the backup action. Following a powerful sign of strength, the price often pulls back. It returns to test the level of the previous resistance. This previous resistance must now function as solid support. The backup action is critical. It is the market's final test of the supply side of the equation. The professional trader looks for specific characteristics during this pullback. The decline should be shallow. The volume must be light or diminishing. Light volume during the backup action confirms that selling pressure is truly exhausted. It shows that the Composite Man retains control. There are no remaining large blocks of supply available to overwhelm the new support level. The lowest risk entry occurs when the market turns upward again after successfully holding this support. This is the final opportunity before the markup phase gains momentum. The initial protective stop is placed strategically. It should rest just below the lowest point established during that backup action. This placement ensures maximum protection while aligning the position with the confirmed intent of the composite operator. Understanding this sequence is essential for trading accumulation structures. Wait for the sign of strength. Enter on the backup action. The exact opposite dynamic applies when trading distribution. There, the trader looks for the sign of weakness. This is followed by the last point of supply, which provides the short entry point before the substantial decline begins. The principle of confirmation and testing remains symmetric across both accumulation and distribution structures. The successful trader approaches the market campaign as a serious business. It requires patience and strict adherence to a defined plan. The goal is not merely finding a single setup. The goal is operating in harmony with the composite operator's overarching intent. This unified strategy involves recognizing the cause before attempting to trade the effect. The size of the accumulation or distribution structure establishes the minimum objective for the subsequent trend. Professional traders calculate this potential reward before initiating any position. Market action must always be judged by its own action. The composite operator plans its campaign meticulously. The resulting price movement reflects the scale of this extensive preparation. The trader must read the tape, focusing on whether effort is yielding expected results. If effort is high and results are low, structural change is imminent. A comprehensive Wyckoff campaign involves controlling risk from the outset. Professional operations always include defined stop losses. This protects capital when the market structure fails or when deception is successful. Risk management is non-negotiable. It is the insurance policy for the trading business. The amateur trader often commits fundamental errors that violate this disciplined framework. One of the most destructive habits is averaging down a losing position. This practice violates the core principle of judging the market by its own action. If a position is moving against the intended direction, the initial structural assessment was likely compromised. The professional operator closes the trade and waits for a new, confirmed opportunity. Capital preservation is the highest priority. The trading campaign must be treated like a large-scale business operation. It requires forecasting, planning, execution, and continuous risk review. Wyckoff's method is a philosophy of market behavior. It teaches the trader to read the intent behind the volume and price movements. The composite operator's secrets are revealed through relentless technical analysis and dedication to the principles of supply and demand. Mastery of this method requires constant study. It demands that the trader observes the supply and demand battle daily. The greatest lessons often come directly from the original source material. To truly internalize these principles and elevate trading to a serious business, the dedication to original study is essential. Richard Wyckoff's masterpiece, How I Trade and Invest in Stocks and Bonds, remains the foundational text for campaign planning and risk control. This book contains Wyckoff's original timeless wisdom, accompanied by Max Davidson's detailed notes and annotations to clarify context for the modern reader. The link to this book is in the description below. You are filling yourself with knowledge, which is excellent. But knowledge alone won't make everyone rich, because not everyone possesses the right foundation. The market is the same for everyone. The only difference lies in the mindset. You can have a perfect trading system, but if you lack discipline and an understanding of your own psychology, that system is worth nothing. I often see a recurring theme in your comments. It is easy to talk about strategy in theory, but when it comes to the actual trade, many struggle with emotions. For those who want to focus on discipline, patience, and self-discovery within trading, I have created a new channel called The Stoic Trader. I believe it will help many of you bridge these gaps. So if you think this kind of content would be useful to you, go ahead and check it out. The link is, as always, in the description below.